Hold on to your hats, folks, because we're diving headfirst into the wild world of cryptocurrency, led by none other than former President Donald J. Trump. This isn't about your grandma's stock portfolio, we're talking Bitcoin, digital tokens, and a whole new way to think about money. Trump, never one to shy away from a headline, has been making waves with his bold crypto plans, and whether you're a tech enthusiast or just trying to understand what's happening to the almighty dollar, buckle up because things are about to get interesting. Trump isn't just dipping his toes into the crypto pool, he's doing a cannonball right into the deep end. He's talking about a national stockpile of digital assets, a big no to those central bank digital currencies everyone's whispering about, and even launching his own digital tokens. Now, before you go digging for your old floppy disks to mine some Bitcoin, let's take a closer look at what Trump's crypto dreams mean for the future of American finance. This is a story about ambition, innovation, and maybe a little bit of chaos, all hallmarks of the Trump era. So grab your hard wallets and get ready to explore the potential and the pitfalls of Trump's crypto revolution, because the future of your wallet might just depend on it. One of Trump's most eye-catching crypto proposals is the idea of a national digital asset stockpile. Imagine Fort Knox, but instead of bars of gold, it's filled with lines of code representing Bitcoin and other cryptocurrencies. This digital treasure chest, according to Trump, would bolster the United States' position in the rapidly evolving world of cryptocurrency. The idea is to create a strategic reserve of digital assets, much like the US holds reserves of oil and gold. This stockpile, proponents argue, would not only provide a safety net against economic instability, but also cement America's position as a leader in the global financial system. However, the idea of a national Bitcoin reserve isn't without its critics. Some experts question the wisdom of investing taxpayer money in what they see as a volatile and unpredictable asset. They argue that the inherent risks associated with cryptocurrencies make them a poor choice for a national reserve. Despite the controversy, the proposal highlights Trump's ambition to position the US at the forefront of the digital currency revolution. Whether this vision becomes a reality or remains a point of contention, one thing is clear: Trump is determined to make America a major player in the crypto game. Trump has made it abundantly clear that he's no fan of central bank digital currencies, or CBDCs. These digital versions of national currencies being explored by central banks around the world have been met with skepticism by the former president. Trump sees CBDCs as a threat to individual liberty and economic freedom, potentially giving governments an unprecedented level of control over citizens' financial transactions. He's called for a complete ban on the development and implementation of a US CBDC, arguing that such a move would be a slippery slope towards government overreach. Trump believes that the decentralized nature of cryptocurrencies like Bitcoin offers a more secure and private alternative to government-controlled digital currencies. Trump's stance on CBDCs reflects a broader distrust of centralized authority and a preference for free market solutions. He believes that the private sector is better equipped to innovate and drive progress in the digital currency space. His opposition to CBDCs has resonated with some who share his concerns about government overreach. However, others argue that CBDCs could offer benefits such as increased financial inclusion and reduced transaction costs. The debate over CBDCs is likely to continue, with Trump's voice remaining a prominent one in opposition. Section 4. States join the crypto craze. Bitcoin goes local. While the debate over a national Bitcoin reserve rages on, several states aren't waiting for Washington to make up its mind. A growing number of states are taking matters into their own hands, exploring the possibility of creating their own Bitcoin reserves and enacting crypto-friendly legislation. States like Texas, Wyoming, and Arizona have emerged as leaders in the movement to embrace Bitcoin and other cryptocurrencies. These states see crypto as a way to attract investment, create jobs, and position themselves at the forefront of technological innovation. This wave of state-level crypto adoption is driven by a desire to foster economic growth and challenge the perceived dominance of traditional financial institutions. By creating a more welcoming environment for crypto businesses and investors, these states aim to become hubs of the burgeoning digital economy. The move towards state-level crypto adoption highlights the growing momentum behind the digital currency movement. It remains to be seen whether this trend will eventually lead to a more comprehensive national crypto strategy. But for now, states are taking the lead, in exploring the potential of Bitcoin and other digital assets. Section 5. Trump Coin Presidential Tokens and Potential Pitfalls. In a move that surprised few, Donald Trump, a man known for putting his name on everything from skyscrapers to steaks, has entered the world of digital tokens. Trump, alongside former First Lady Melania Trump, launched his own digital currency, aptly named Dollar Trump. The tokens, marketed as collectible digital trading cards, were met with mixed reactions. Supporters hailed them as a novel way to engage with the former president and potentially profit from their association with his brand. Critics, however, raised concerns about potential conflicts of interest and the lack of transparency surrounding the token's utility and value. The launch of Dollar Trump highlights the growing intersection of politics, celebrity, and cryptocurrency. While some see it as a harmless way to capitalize on Trump's enduring popularity, others worry about the potential for these tokens to be used for misleading or even fraudulent purposes. The saga of Dollar Trump serves as a reminder that the world of cryptocurrency is still largely unregulated and ripe for exploitation. As more and more high-profile figures enter the space, it's crucial for investors to proceed with caution and thoroughly research any project before investing their hard-earned money. Section 6. Bitcoin versus inflation, a financial shield or a risky gamble. One of the most frequently cited arguments in favor of Bitcoin is its potential to act as a hedge against inflation. Bitcoin enthusiasts, often referred to as Bitcoin maximalists, believe that the cryptocurrency's limited supply and decentralized nature make it an ideal store of value during times of economic uncertainty. They argue that Bitcoin's value is not tied to the whims of central banks or the performance of traditional markets, making it a safe haven when fiat currencies lose their purchasing power. In this sense, Bitcoin is often compared to gold, which has historically been seen as a hedge against inflation. However, critics counter that Bitcoin's extreme volatility makes it a risky bet for those seeking to protect their wealth from inflation. They point to the cryptocurrency's wild price swings, which can wipe out savings just as quickly as they can generate profits. The debate over Bitcoin's role as an inflation hedge is likely to continue, with strong arguments on both sides. Ultimately, the decision of whether or not to invest in Bitcoin as a hedge against inflation is a personal one that should be made after careful consideration of one's individual financial circumstances and risk tolerance.